We retain the right, but not the obligation to move policy when we think it's necessary.
But if they make a misstep, I think they are likely to tighten too late rather than too early.
I think this Jackson Hole is going to be very interesting.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. More pain from the chip crunch. A new report says global shortages will cut auto production by as much as 7.1 million cars this year. European car makers slump this morning. Reports say China's top legislative body unexpectedly delays a vote on anti-sanctions law in Hong Kong, while shares in Asia slide as China's regulatory curbs sap sentiment. Merkel in Moscow. The Russian-speaking German chancellor meets Putin for the last time to discuss Nord Stream and Afghanistan. Well, also quite a lot of market movements now because of the chip shortage, concerns also about regulation in China and concerns overall about growth. We're seeing a down day once again for Europe. This is a third day straight. U.S. stock futures are also falling. The dollar extending a rally as faltering growth, but also China's regulatory curbs compounded risks before the Federal Reserve's Jackson Hole Symposium next week. Now, what I'm looking at is a lot of the commodity sell-off, and that's certainly one of the things that could reprice certain asset classes. European car makers also slumping this morning, according to a new report from IHS Markit. The worldwide shortage of semiconductors will cut global auto production by as many as 7.1 million cars this year. Now, that forecast doesn't include the latest cuts that Toyota announced yesterday.
We believe that the worst is past.
It is very fluid.
The chip shortage is going to run well into 2022.
The chip shortage is also, which is driven by the capacity. Already the actions has been taken by our suppliers, and this will also go away.
Microchips are the center of most of this activity, but we're seeing a wide range of supplier disruptions due largely to continued outbreak of COVID.
We do think we'll probably be into at least mid-22 until we start to see supplies rebound.
Whether this will go away in short term, I don't think so.
We've seen shortages of somewhere between 5, 10 to 20% maximum production compared to our initial plans.
Well, joining us now is our German business editor, Stefan Nicola. Thank you so much, Stefan, for joining us. So actually, from bad, could it get even worse?
Yeah, Francine, that's right, unfortunately. And one problem with all of this is the lack of visibility that all of these companies have. But many of them agree that it looks like it's getting worse before it gets better. And that is sort of a slight change from past predictions. There were hopes that this is all over by early next year, but it looks like the chip crisis will affect car makers and producing companies well into 2022 and, possibly into the second half even.
So, Stefan, what does it mean? I mean, is it because actually car makers significantly ramped up production as economies reopened that now they're hit by global chip supply, or is it just as levels that they were producing last year?
It's a combination of everything. We've talked about the chip crunch many times before, and sort of how lots of problematic developments have sort of combined to lead to that chip crunch. The problem is now that demand is really kicking back in, and car makers had expected this to go much smoother. But now, of course, the pandemic is kicking back in as well, and you see some of these disruption issues due to the COVID pandemic and the Delta variant resurging in some parts of Asia and Malaysia, for example, where chip production is curtailed. So, a lot of bad things are happening at once, and that's the unfortunate reason why we're still having this problem.
Yeah, thank you so much for joining us today. Bloomberg's German business editor, Stefan Nicola. Now, Chinese stocks have also tumbled as the country's tech crackdown moves into a new dimension. The administration has passed now legislation setting out tougher rules for how companies handle personal data. Firms will be required to obtain user consent over information collection and provide a way to opt out. Well, joining us now is our chief Asia economics correspondent, Enda Kern. Enda, I mean, this is part of the bigger crackdown. Like, how much more crackdowns and regulations are we going to see?
Well, it's another day and yet another set of sweeping regulations, Francine, as you mentioned. The particular points coming out of today is the fact that the government will limit kind of profiles that tech companies can keep on their users. And of course, they will also intervene in terms of what AI programs can recommend to customers. Now, you can say that's consumer safety, or you can say that's the government keeping control of big data. But either way, it all falls into a much bigger picture of what's going on in the background, which is that the government really is pushing through some house cleaning when it comes to China's economy. They are talking about enforcing laws and regulations on so many corners of the economy at the moment, not just technology, but we're talking about areas including healthcare, and they're even talking about, we saw that big crackdown on online education a few weeks ago. So there's no sign of this big sweeping crackdown is going to slow down anytime soon. The Communist Party government say it's necessary to create an economy that's fit for the future. But of course, in the near term, markets are pretty nervous.
And any insight into why now?
Well, I guess there's a sense that there's no doubt that people are questioning the execution of all of this. I mean, it's both appears to be very hurried to outsiders, and certainly the implementation of it appears to be quite aggressive, as we saw with the online education sector that I mentioned a few weeks ago. It's coming thick and fast, and there seems to be no mercy being given to any securities caught in its wake. But at the same time, the party in China will say that this is all about alleviating the costs for families. It's about making a more productive workforce, ensuring that the workforce can grow and that thereby the economy can get on an even keel in the years ahead. So I think they're kind of accepting or girding for near-term pain and some near-term disruption, even if that's ups and downs in the markets. But longer term, they're saying this is going to drive some productivity dividends and bigger gains for the Chinese economy.
Thank you so much, Enda Curran there, our Chief Asia Economics Correspondent. Now, as the U.S. CDC delays a decision on booster shots, health insurer Vitality hopes to drive vaccine uptake based on its incentive model. Later on this hour, we speak to the Chief Executive, Adrian Gore. Now, if you have any questions for him, just IB plus TV Go. This is Bloomberg.
Of course, October's a live meeting. We retain the right, but not the obligation to move policy when we think it's necessary.
The RBNZ governor there, Adrian Gore, talking about what happened this week. Now let's get the latest on the markets. We're joined by Jeremy Stretch, head of G10 FX strategy at CIBC. Jeremy, thank you for joining us. Actually, we've had a quiet August week, not at all quiet, given some of the currency moves and some of the equity moves. A lot of it is driven by dollar. What happens to dollar next?
Yes, you're absolutely right. It has been a pretty exaggerated week of volatility. I think clearly the markets have been roiled by the concerns regarding the Delta variant. And of course, the RBNZ has been at the epicenter of that in the context of the changing dynamics, or the lack of changing dynamics in terms of Kiwi interest rates because of the proliferation or the start of cases in New Zealand once again. So I think from the bigger dollar perspective, I think there is still a case that with tapering on the horizon, and of course, we'll watch and wait for Powell this time next week at Jackson Hole. But with rising real yields in the US and or the potential flight to safety and liquidity of the dollar, then it does seem most likely that we are going to continue to see dollar gains. And I think that is going to continue to come at the expense of those that are pro-cyclical or commodity correlated currencies.
Okay, Jeremy, what's a catalyst for actually a little bit? I don't know whether it's a little bit of a correction from here or actually a little bit more stability going forward. Is this the start of something that could snowball, or is it just quirky moves in the summer months?
Well, I mean, liquidity is evidentially relatively thin, so I think that is amplifying some of the moves. So I think you always have to be careful about extrapolating what happens in terms of those thinner market episodes. But I think we are in an environment where the global growth numbers are proven to be challenged, and we're seeing a number of reasons and functions for that, not just purely COVID related, but some of the byproducts of that in terms of the weakness in terms of global supply chain. So I think we are seeing a moderation in activity levels, and I think that will prove to be troublesome for those that are driven by those pro-cyclical elements. But I think in the context of the US story, then there is still a reasonably constructive backdrop. If we are going to continue to see that labour market recovery ongoing, then I think the distinction between what's happening in the US and in terms of Fed policy with elsewhere, I think becomes relatively pronounced, and that's the reason for the dollar rally. But I'm not sure necessarily we're in a scenario yet when we should call off any hopes for that global recovery trade purely on the basis of the rising tide of Delta variant cases.
So, Jeremy, what are you expecting actually from Jackson Hole next week?
Well, I think the minutes set us up for the expectation of setting the scene for a tapering backdrop. Of course, before we get to that September FOMC, we also have another payrolls report, and if that is consistent with the retreat that we saw in claims yesterday over the payroll survey week, then I think next week should see Powell providing a template or an overview of the sort of the tapering bias or the tapering outlook. And I think that has been forestalled. It has been forewarned by some of the other Fed members over the course of recent weeks. So I think Powell will be setting out the stall for tapering and allowing the market to see what the parameters are likely to be going forward. And so I think that in itself should continue to keep that dollar bid bias remaining in place.
Jeremy, we of course saw, and we started by hearing from the Central Bank of New Zealand, given what happened this week. Are we going to see more lockdown? I mean, this was one case, and actually New Zealand went to lockdown. I guess it was unfortunate timing that this happened the day before the decision. But how much are you focusing on some of these currencies that actually could move because of the zero policy COVID approach?
Well, absolutely. I think the suppression strategies that we've seen in place in terms of Australia and New Zealand initially proved to be very successful, but now become much more problematic, particularly as we're in a world where vaccination rates in general have moved up exponentially, and we're now seeing a sort of a different strategy being pursued. So it does leave Australia and New Zealand in a slightly difficult position in that particular context. Clearly, the timing, as you say, from New Zealand's perspective for the RBNZ was particularly troublesome with that one community case coming out the day before the decision. Clearly, Governor Orr has to say that each and every meeting remains live. But I think if we are going to see the perception of perpetuation of lockdowns in New Zealand, we've already seen that national lockdown extended slightly overnight, then the longer that lockdown scenario plays out and the greater the impact that has on macroeconomic activities, then the greater the potential for rate hikes to be pushed out into the middle distance. And I think the RBA will clearly be much more comfortable with its own interest rate profile than perhaps someone in the market was suggesting a month or two ago, because, of course, that extension in New South Wales in terms of lockdown conditions will continue to constrain activity there. So it does suggest that the policy backdrops for those currencies which had been perceived to be nearer a tightening bias will prove to be compromised if their growth numbers are under pressure.
All right, Jeremy, thanks so much. Jeremy Stretch there, head of G10 FX strategy at CIBC. Now, also, just a couple of seconds ago, the Hang Seng Index slumped some 20% from its February peak, which actually means that we're now entering a bear market. Now, let's get straight to the Bloomberg First Word News. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. Sydney's 2-month-long lockdown is to be extended until at least the end of September as Australia's Delta outbreak worsens. New Zealand, meanwhile, has extended its nationwide lockdown by 4 days after an outbreak spread beyond the largest city, Auckland, placing pressure on the so-called zero-COVID strategy. China has taken the next step in taming big tech. Lawmakers have passed legislation setting out tougher rules for how companies handle user data. No details of the new law were immediately released, but earlier drafts required firms to get customer consent to collect, use, and share information. U.S. Secretary of State Anthony Blinken and G7 foreign ministers have agreed during a virtual meeting that the Taliban's actions will determine the relationship with the international community. Participants also underscore the imperative of safe passage for people wishing to leave Afghanistan. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg. Francine?
Angel, thank you so much. Now, coming up, Angela Merkel heads to Moscow in what will be her last meeting with Vladimir Putin as Chancellor. Discussions will include Afghanistan and Nord Stream 2. We'll get the latest from Berlin. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So Angela Merkel is heading to Moscow today, just over a month before German voters decide her replacement as Chancellor. Now, she's set to meet with Vladimir Putin before heading onto Ukraine over the weekend. A Russian speaker, Merkel and Putin, have a long relationship, and she's provided an open line of communication between the West and Moscow during her tenure as Chancellor. Now, that relationship may never be more timely than now, with Russia one of the few nations to keep its embassy open in Afghanistan after the Taliban took control. So for more on all of this, from Berlin is Bloomberg's Maria Tadeo. Maria, the significance of Merkel-Putin meeting is quite big. I imagine they'll talk about Afghanistan and Nord Stream 2.
Yes, and Francine, as you said, she is someone who has worked with Vladimir Putin for more than 10 years. Angela Merkel grew up in East Germany. She speaks perfect Russian. She knows to some extent how the Russians operate and the Kremlin politics very well. Now, two issues, of course, that will feature very high on the agenda is the situation in Afghanistan. When you look at German politics right now, this government is really struggling and scrambling to get their embassy out and their personnel out. The Russians, however, they say they stay put and will stay on site. A lot of the conversation will feature probably in terms of what to do with the new regime, what to do with the Taliban, and under what conditions perhaps that new regime would be recognized by both Russia but also Western powers in Europe. The other issue, of course, is the Nord Stream pipeline. That construction is going ahead. It won't be canceled. At one point, that was a debate whether or not Germany will go ahead with that. They've made it clear they will. But the conversation will feature on Ukraine and what to do with potential lost revenue that the Ukrainians may suffer from in terms of the transit fees from the gas pipeline, and what to do with the geopolitics in Eastern Europe. There has been for now months real concerns in Europe about Russia putting and deploying all of those troops in the Ukrainian border that may destabilize the country even further.
I have to say, Maria, I mean, the relationship, right, between Angela Merkel and the Russian leadership is so valuable, not only to Europe, but the rest of the world. Is there anyone who wants to be her successor who could replicate that?
Well, exactly, Francine. And we haven't really seen any type of leadership that compares to Angela Merkel in that front, purely because they speak eye to eye and they speak the same language. Also, she's someone that in her own background kind of knows how those almost Russian, Soviet style, that's something that she's repeated in the past, operates, and the techniques and the tactics that they use in their own diplomacy. In terms of in the European leadership, we have seen Emmanuel Macron of France trying to engage with Putin, but never to that extent. When you look at the internal domestic politics in Germany, we haven't seen anyone that can match or compare to Angela Merkel either on that front. Angela Merkel has that experience. When you look at Armin Laschet, he's someone that's cut his political ground in Germany. He's very much your typical German politician that's good at domestic policies, but not foreign. Olaf Scholz is doing well in polls. He's focused very much on the finance, but doesn't have the foreign experience. So there isn't a clear successor to that extent when it comes to Angela Merkel, and in particular, the Russian connection of Angela Merkel.
Maria, talk to me a little bit about the looming refugee crisis that could come and stem from Afghanistan. How will that reshape actually the German election?
Well, this is a big conversation happening in Germany this week. Of course, it brings up the echoes of the 2015 refugee crisis. I do have to say a lot of the political analysts and the experts on migration that I've been speaking to this week, they actually say this is a very different picture, purely because the European Union is now spending all of this money, especially in Turkey, to keep that at bay, to not have this happening in continental Europe. In terms of the actual debate, it is bringing up big differences between the Christian Democrats and the progressive side of German politics. Yesterday, I spoke with Annalena Baerbock, who is running, of course, to be the chancellor for the Green Party, and she said the priority is to help out people that have helped Germany on the ground in Afghanistan. Let's take a look.
We as a common international community have to stand now together because the NATO troops are in responsibility to save those people who have supported the NATO troops in Afghanistan, being a translator, being a cook or being a journalist. So the NATO troops have to ensure now that these people can come to the airport, meaning also talking to the Taliban to save those people who trusted us.
And that was Annalena Baerbock, the Green Chancellor candidate, speaking about the need, the obligation that Germany has to help out the refugees in Afghanistan. Francine.
Maria, thanks so much. Maria Tadeo there in Berlin. Coming up, surging Delta cases delay the world's march back to the office. Can behavioral science help incentivize vaccine uptake? We'll talk to the chief executive of Vitality Health. This is Bloomberg. While U.S. COVID deaths hit levels not seen since February, the CDC delays a decision on booster shots. We speak to the chief executive of health insurers Vitality up next. The Taliban set up checkpoints around Kabul airport, raising concerns about evacuations. Joe Biden says the militant group are in the midst of an existential crisis. And Merkel in Moscow, the Russian-speaking German chancellor, meets Putin for the last time to discuss Nord Stream and Afghanistan. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the markets are selling off. They're selling off a little bit sharply, sharply is not a word, but it's definitely a more sharp sell-off than it was just 15 minutes ago. The focus firmly on that data we had from, for example, China. So the China concern is about tech regulatory crackdown, and we saw a sharp sell-off in their commodities also because of what we could see in terms of the Delta variant and the hit on growth. So a lot of the attention will next week be on Jackson Hole. Today it is on China and some of the concerns about how quickly the recovery can continue to take hold. The FTSE, the DAX, the CAC 40 down between 0.3 and 0.4%. Now, the worst of the coronavirus pandemic may be behind us, but some offices aren't much closer to returning staff to their desks full time. The spread of the Delta variant has forced many employers to delay back-to-work plans, with some firms mandating vaccines to enter offices. Insurance company Discovery, best known for its Vitality Health program, sees its incentive-based model helping to drive vaccine uptake. Well, we're joined now by the chief executive of Discovery. He's Adrian Gore. Thank you so much for joining us, Mr. Gore, here in today's Bloomberg Surveillance. When you look at some of the incentives out there, what's worked and what hasn't?
Well, I think firstly, incentives about behavior change do work. I mean, that we've seen very, very clearly. I think applying incentives to vaccine take-up is maybe much more complex. I think it's early in the process now, and I think that the behaviors you're trying to change are very, very, they are complex, they're ideological, they're based on often a fake sense of science, etc. So this is a complicated behavior to change. But I would say to you that the fundamentals are what we're trying to do around behavior change and making people healthier just seems so important in kind of a COVID and a post-COVID environment. I mean, we've seen the data of just how resilience is critical against death from COVID. So, the kinds of things we are focusing on around wellness, physical activity, nutrition, incentivizing that has become much more important as we move into this post-COVID environment. So it's a complex environment, but one where I think we are very excited about the impact we can have.
But how can, for example, an insurance company, where people are very health aware, if they use the app, try and counter some of the fake news out there?
Well, I think the fake news can only be dealt with through all kinds of methods of intervention, of education, etc. But we are trying our best to share the data that's emerging from the vaccine, making it absolutely clear that the combination of vaccination and better lifestyle choices is the only way to survive in a post-COVID environment. So I think it is a difficult battle to to have. And I think in our home country of South Africa, for example, I think the vaccine process is going very, very well, but we're battling the same kind of issue of vaccine hesitancy. So I think what we're trying to do as much as we can is we are completely and totally aligned to our customers. If our customers are healthy, that's good for us. And I think our shared value model is about using those incentives to change behavior. So as we learn more about what incentives work to change vaccine behavior, we will do that. But at this stage now, I think we're trying our best to incentivize, to show people the data emerging from the use of vaccines, and it's remarkably compelling, as you will know. So this is hopefully a battle that we will win, but I think there is only really two ways forward through this COVID environment: vaccination and better lifestyle choices.
Have you learned any lessons on actually vaccine administration that could help for booster shots and could help people, convince people that actually vaccination is the right way to go?
I'm not sure the data on the booster shots yet is still early, and I think that needs some development. But I think the emerging data out of the vaccinations and out of looking at hospitalization rates and particularly death rates has shown absolutely without any doubt the kind of delinking of infection to death. So the vaccines have done that. And I think the best we can do is illustrate and demonstrate that data to our customers and to our members and to incentivize that. So, for example, we are now actually differentiating our life insurance premiums, what we charge for life insurance, based on whether people are vaccinated or not. So we're using the data in fairly profound ways. And I think that the actual, the financial benefits to people, the obvious health benefits should be clear, but that unfortunately are not. But we're using our data more and more to show people that the chance of death is high. And if you buy things like life and health insurance, you will end up paying more for them if you're not vaccinated. So we're using all of the financial levers we can to try and change that behavior. And I think that is fundamental.
So, Adrian, I know you've recently launched a survey of almost 90,000 of your members in the US. And actually, I don't know if the process was then of Q&A. How many of those members are now actually fully vaccinated?
Well, I think we found about 70% or more were fully vaccinated. And I think we found in different markets similar kinds of vaccine hesitancy and similar kinds of ideas about why they do and don't get vaccinated. So it is a very complex behavior to change, I have to say. In our home market here in South Africa, as I said, we are trying our best to overcome what is now a very successful rollout of the vaccine, but again, fight against attitudes about vaccination. I think incentives, when you think about financial incentives and lifestyle incentives around changing behavior, some behaviors are simple to change. Getting people to be physically active is one of the best kinds of behaviors to change. I think vaccine behavior is more complex. I think the deep ideology in certain markets makes it much more complex battle to fight.
I mean, we've also seen certain companies actually say, please don't come back to the office unless you're fully vaccinated. I mean, when companies say that, is there an immediate uptake of the vaccine?
I think you do see that. I think it's early days that companies are doing that. I think we're only seeing now the effects of that. We as an organization around the world are trying to do that. And in fact, in our Vitality program, we are giving Vitality points and incentives to be vaccinated. But I do think that and we have seen that when companies do say that they are, to work at our company, you either cannot enter the building, the premise is actually not vaccinated, or you can't be employed here, it does have an effect. But I think the data is early. We have to see how it plays out. I do think from a discovery vitality perspective, we do advocate a very strong view on this and are kind of absolutely focused on trying to get our people vaccinated. And we are, as a company, saying in a number of months' time, we will be making it compulsory. But again, I think it's early days in this debate, but we have to work very, very hard to do this. It's the only antidote.
Discovery has a very strong track record of robust investments in actually new business. 18 months into the pandemic, or maybe not 18 months, 16 months into the pandemic, how has your view changed on how capital should be deployed?
I think that hopefully the pandemic is coming through as we enter into post-COVID world, but I do think capital should be deployed in areas of wellness and resilience and healthcare. I mean, we've seen that. I think there's a massive, massive shift to focus on wellness and resilience and understanding that. So the focus we've had on building our businesses, our tech, our Vitality platform, I think will pay off remarkably well. I think that deployment of capital into understanding illness, understanding the correlations and causality is more important than ever. I mean, we've seen again in this COVID environment that our model was kind of built out of a focus on non-communicable disease, disease of lifestyle. We found the same resilience factors apply to infectious diseases, to COVID. So capital and focus on making people resilient and understanding healthcare and using technology and healthcare to broaden access is fantastically powerful, I think, for society, and therefore for businesses that do it well, I think it will pay off remarkably well. So we've invested heavily during this period, as you've said, in our new businesses, and are seeing, I think, a very good evolution as we come through this COVID period.
Adrian, thank you so much for joining us. Adrian Gore there, the Chief Executive of Discovery. Now, New Zealand has extended its lockdown by 4 days, trying to stop its latest outbreak of coronavirus. This week, the country's central bank delayed an expected rate hike, with which the governor, Adrian Gore, says may now happen in October.
We have to focus very much on our purpose, which is, of course, the inflation and employment mandate that we have. And, absolutely, this week was not the best timing to be looking to reduce interest rates, given reduce the monetary stimulus, I should say, given the health situation. But, time is on our hand. We can observe what is going on, and the underlying economics remains the same. We have significant capacity constraints. We have one-off price spikes. We have rolling supply disruption creating the costs. We are above maximum sustainable employment. So the underlying situation remains the same. But we thought best, let's just observe over the next few days at little cost to us. And we need to just be true to our mandate, which is to say, are inflation pressures rising? Are we at or above maximum sustainable employment? And hence, should we be back more at a neutral interest rate? What would change that view? Well, you would have to see a significant shock to demand. What we've learnt through time is that incomes remain strong, demand bounces back very quickly, and that these rolling lockdowns will continue for a while. So that flexibility, remain focused on the medium-term target.
Well, I hope all those investors and traders who kind of control the market expectations for rate changes are listening closely, because market expectations for an October hike had been much, much higher, maybe close to 100, are down to 59%. Maybe that's, first of all, because you skipped this rate hike in the midst of that sudden lockdown in New Zealand because of this surge outbreak, or the case outbreak, but also maybe because it's not going to be a monetary policy statement meeting where you typically would make a rate change. It's a monetary policy review meeting. Now, it's true, you announced the end of your long-term security asset purchases at a meeting just like that. But are you then saying that October is a live meeting regardless of any of this?
Of course, October is a live meeting. We retain the right, but not the obligation to move policy when we think it's necessary. We can communicate in many different ways. Our monetary policy statement released this week outlines very clearly our views on what the neutral interest rate is, where we see the capacity pressures, how we see inflation performing. And, we have the official cash rate back at neutral over next year, the course of next year, which is 2% compared to 0.25 now. What would push us off that course? We would have to be very convinced that the supply side has suddenly been able to respond, removing inflation pressures, or the demand side for the economy has had a significant turnaround. And that would mean fiscal policy is not doing its job.
That was the RBNZ Governor, Adrian Gore. Now, in the meantime, a lot of market movements. The HSI actually entering a bear market. The Hang Seng, you can see, down some 20% since February. So that's officially now in a bear market. Down day, once again, in Europe. Concerns about Delta, concerns, of course, about what's happening with tech regulation in China as well. Up next, we discuss the latest market moves with Noor Al-Ali from our Markets Live team. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. The U.S. Federal Trade Commission has refiled its monopoly lawsuit against Facebook. It alleges the social network pursued a strategy to buy or bury rivals to suppress competition. The suit asked the court to unwind Facebook's acquisitions of Instagram and WhatsApp. Facebook says the takeovers were lawful and were reviewed and cleared many years ago. The new surge in U.S. coronavirus cases has prompted Apple to delay its return to corporate offices from October until January at the earliest. But the company says it does not expect to close offices or retail stores. Meanwhile, Charles Schwab also is delaying its return to office plans to no earlier than January. OnlyFans is getting out of the pornography business. From October, the company will prohibit sexually explicit conduct on its website, although some nude photos and videos will still be allowed. OnlyFans has attracted more than 130 million users, its popularity increasing during the pandemic as sex workers, musicians, and online influencers use it to charge fans for exclusive content. And that's your Bloomberg Business Flash. Francine?
Thank you so much, Angel. Now, the Hang Seng actually entering a bear market, which means that since February, we saw a 20% plunge. Now, for an overall talk about the markets, joining us now is Noor Al-Ali from our Markets Live team. Noor, great to speak to you. Yesterday, we were talking about the Fed and some of the Fed moves. We talked about regulation. It feels like all of these various points of anxiousness from the markets kind of are filtering through today.
Yeah, absolutely. I mean, I woke up this morning expecting to see some form of movement. Yes, we had an extended sell-off in Asian equities, as you've just mentioned with the Hang Seng, but there is some more room to go there because its previous PE ratios gives it, I think, a bottom of about 27% in the past two peaks that we've seen before. So unfortunately for Chinese equities, especially with the onset of more regulatory clampdown from the government there, it's a little bit unclear where these assets are going. But if you look at European markets today, I mean, it's kind of like a Friday morning, you know, people are just waking up. It's as if the other day never happened and the sell-offs just disappeared into our memory.
Noor, so what exactly is driving the markets? Is it also very thin volumes? And I know I've been asking you all week, but it's, you know, yesterday we're speaking to market strategists that were saying actually this is the start of something more sinister, and others saying it's just maybe a quirky day in the summer months.
You know what? I've actually gone back to my desk yesterday, and on the Markets Live desk, I've looked at volumes because I've been saying, you know, August is historically a low volume month. So I've looked at the AVAT function for the equities yesterday, at least for the stock 600, and it was pretty much at about, you know, it seemed pretty low for the levels that we've seen today. So definitely I can tell you that while the current spot market was, at least for yesterday's market, was a little bit subdued, the futures market had a bit of more volume, at least for U.S. equities. But then we saw U.S. equities open yesterday, and it was as if the Asian sell-off never really happened for them. So you can see a bit of a divide here with what's happening with markets. The U.S., you know, wakes up and they see, oh, God, sell-off in Asian equities. What's going on there? But doesn't really follow through there throughout the trading day. And the dollar has just, you know, extended its rally to its new year high here. So we're seeing a bit of a divide of how markets are pricing in the FOMC meeting. But of course, with Asian equities, it's the Delta variant, at least there, and the Chinese regulatory onslaught there.
Noor, I know the Markets Live team are also spending quite a lot of time looking at commodities and, you know, whether there's a sharper sell-off in commodities and whether that actually infects other asset classes.
Look, there are two schools of thought here. Some people do argue, and I'm in that camp as well. On the long term, commodities have so much more to give, especially when it comes to assets like copper, where, you know, they're a lot more relevant for the EV, you know, the EV strife and the green move that we've seen there, because you do need copper to build a lot of the electric vehicles that are out there, with especially more movement. But you've got things like oil, really, and when that argument comes into play, it's really harder to see, you know, the concept of a super cycle, as many have been saying. We've had Bloomberg economists say, you know, perhaps it's a mini cycle, and we've seen the dip. You know, it all comes down again to September 1st when OPEC meets and whether or not they're going to heed to what the U.S. wants.
Noor, thank you so much. Noor Al-Ali there from our Markets Live team. Now, coming up, as well as a human toll in Afghanistan, there's also the impact of the economy in free fall. We'll discuss the latest on the nation's crisis next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So it's been 5 days since the Taliban swept into the capital, Kabul, as the military and government crumbled. There were chaotic scenes as U.S. troops at Kabul airport strove to evacuate Americans as well as Afghan civilians, fearful of retaliation for working with foreign militaries. Well, here to round up this week's distressing developments in the Central Asian nation is our Afghanistan reporter, Altaf Najafizada. Altaf, thank you for joining us. I know you've been extremely busy trying to contact people on the ground to exactly figure out what is going on. What is the situation like right now? How destabilizing is it?
Well, the situation is still kind of chaotic because people on the ground, they are rushing toward the airport and several embassies in the hopes of being evacuated by different countries, such as Canada has promised to evacuate 20,000 Afghans, or the United States have promised to evacuate thousands of Afghans. So those Afghans have been keep coming from different cities into Kabul and rushing toward the airport embassies. It's chaotic in those areas. But overall, in other areas, the situation is getting under the control of the Taliban. The Taliban are trying their best to stabilize the city, especially the capital of Afghanistan.
Altaf, are there any signs of resistance to the Taliban actually building across Afghanistan?
Yes, we have seen reports of people protesting against the Taliban across the country. The demonstrations have been conducted by people in capital Kabul or other several cities in the eastern and southern provinces, like in Jalalabad and Pune and those areas. However, this protest has not been so wide. But it shows some signs of resistance against the Taliban, that they don't accept any Taliban-led government, which they had in 1990, same Taliban-led government. So they would like to see more freedom for women. They would like to see women having jobs in the government, having having some sort of freedom in the society.
Altaf, thank you so much. Our Bloomberg Afghanistan reporter there, Altaf Najafizada. Now, in the meantime, we'll look at the markets in a second, but I want to bring this to you. Tonight, Bloomberg will be premiering a TV special, Inside Venezuela. Our Eric Schatzker sits down with those who are set to decide on the country's future, Nicolas Maduro and his opposition. Now, playing out tonight and over the weekend on Bloomberg TV. Let's also have a look at the markets, because for a Friday actually in August, the markets are really on the move. I know volumes are thin. We had a nice brief from Arnour Al-Ali looking at some of the dynamics. First of all, it's about tech crackdown. The other, of course, is at commodities. Because of the Delta variant, a lot more people worried about what it means for the future of growth. So we're seeing faltering growth, China's regulatory curbs really compounding risks right before the Fed's Jackson Hole Symposium next week. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins us out of Berlin, Kailey Leinz out of New York, and of course our Danny Berger will join us as well. This is Bloomberg.
We retain the right, but not the obligation, to move policy when we think it's necessary.
But if they make a misstep, I think they are likely to tighten too late rather than too early.
I think this Jackson Hole is going to be very interesting.
This is Bloomberg Surveillance Early Edition with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, August 20th. Our top stories today. It's a week to forget for investors. U.S. stock futures are down, and the coronavirus is just one of the reasons for gloom. Now many are waiting to see what happens at next week's Fed Symposium in Jackson Hole. And don't forget China's impact. That crackdown on big tech has resumed with a new law on personal data. And think you're going back to the office? Well, the Delta variant surge has companies around the world rethinking their plans to have staffers return this fall. Well, good morning, everyone. I'm Francine Lacqua with Danny Berger in London, Kailey Leinz in New York. Matt Miller is actually off today. Kailey, if you look at the markets over the last 3 days, we had a little bit of a pattern, which is Asia sells off, Europe sells off, less in Asia, but actually the U.S. usually buys on the dip.
Yeah, and we'll see if that comes true again today, Francine. Certainly the sell-off in Asia had. If you look at the overnight session, it was broadly lower across really the entire Asia Pacific, but really the underperformance was led by China and Hong Kong. The CSI 300 down about 2 percentage points, and actually the Hang Seng Index plunging into a bear market. The concern there, of course, is regulatory concerns coming out of Beijing with that new personal data law designed to crack down on big tech. And that actually took the Hang Seng Tech Index down to a new all-time low. And of course, you also have Chinese state-sponsored media talking about other areas that could see restrictions. And one of them is being the online prescription drug space. And that took JD Health International down 14% in the day's session. In other asset classes, I would note it is a broadly stronger dollar story again today. But one exception to that is the Japanese yen, which is fractionally stronger against the dollar as it gets kind of that haven bid. It's sitting at 109.69. And then we are seeing a rebound in the commodity complex, including iron ore, of course. It had a double-digit decline yesterday. Today, though, futures up about 6.4% in Singapore. As for the picture here in the U.S., it was a very choppy session yesterday. We did see equities eking out gains, but this morning, once again, futures are in negative territory. We're down about 20 points on S&P E-minis. You are, I want to point out, going to pay attention to volatility today. We're looking at a 23 handle on the VIX. We are around the highest we've seen in about 2 months, and we do have options expiring today, so that could mean a little bit more volatility once the open does indeed come. Slightly lower in the Treasury market, down less than a basis point on the 10-year yield. However, that would be the 6th down day, 4 yields in a row. We're sitting at 123 on the 10-year. And finally, crude not necessarily taking part in that commodity rebound. It was positive earlier, Danny, but once again down by about 0.4%, just above $63 a barrel.
Yeah, those cyclicals still not able to catch any buy the dip action. Look, Europe is certainly looking more bright than the rest of Asia, the rest of the U.S., but that doesn't mean it's a pretty day. We're still looking at a mostly negative markets day. Really, the only thing to perform better are small caps in the UK, and that's simply just a factor of a stronger currency, of that pound FX effect. Elsewhere, we're just seeing these really high beta cyclical type names sell off throughout most of Europe. So you're seeing Germany look really weak. Italy looks weak as well, and perhaps a little bit of strength in Spain, but that's pretty much as far as you're going to get in terms of outperformance in Europe. So let's quickly look at your headline index. It is down 0.2%. This is the first time since June that Europe, US, and Asian equities are on track to end the week lower. So that gives you a sense of just where we are in this market and what the current mood is like. Now, a German bund is tracking the US 10-year. We're heading towards a negative 0.5%, but the pound underperforming today. I was saying this earlier. This is why you're getting some outperformance in UK stocks. Cable getting hit by a UK retail sales that had started to drop. It's that reopening story seems like it's backtracking a bit, especially here in the UK, despite the fact that Delta had peaked in the region earlier. Finally, Francine, I'm going to do my best Matt Miller impression and talk about autos today because it's the worst performing sector. And look, this is really important for what's happening in markets today. It's underperforming after some of the comments from Toyota on them having to cut production by 40% because of an ongoing chip shortage. The renewed cases of Delta, Francine, means that car makers aren't able to get the chips they need to put in production. I think that's a really good microcosm of sort of the Delta fears throughout the entirety of this market.
I can't believe Matt is off today. We also have 2 really good pieces of news with a British grocer, and actually he always says how much he loves UK grocers. M&S up 5%, and also Morrison, another bid, gaining some 7%. Now look at what else is ahead today, and Angela Merkel travels to Moscow for a meeting with Russian President Vladimir Putin before making her way to Ukraine over the weekend. Deere releases second quarter results before the bell. Dallas Fed President Robert Kaplan will speak at 11 a.m. New York time. And then tonight at 7 p.m., Bloomberg Special Inside Venezuela, are Eric Schatzker in conversation with the Venezuelan President Nicolas Maduro. Now, Chinese stocks tumble as the country's tech crackdown moves into a new dimension. The administration has passed legislation setting out tougher rules on how companies handle user data. Well, joining us now is Enda Curran, our chief Asia economics correspondent. Enda, a lot of investors trying to figure out what's next in terms of regulation. The others also trying to figure out why now.
Well, it seems that there is plenty left for regulation, Francine. That's all the indications. The move on tech today coming out of the NPC is, on the one hand, all about protecting consumer data and personal privacy. But of course, on the other hand, it's all about ensuring that the party remains in firm control of the big tech sector and, most importantly, in firm control of data. We don't have full details of the law that was agreed today, but some of the pointers that have come out include, for example, limiting the kind of profiles that tech companies can keep of their users, and clamping down on what these AI programs can recommend users to buy. So it's an example of another crackdown on the tech sector. There's no end to it in sight, and I think all indications are that we'll see more measures coming in the weeks and months ahead.
And the measures and the details of them may be new, but they're not surprising. We know that this is the direction that Chinese regulators are heading. So why do we continue to see a market that acts surprised, that sells off very dramatically?
That's a very fair point. On the one hand, I think the surprise factor here is the aggressive implementation of it, maybe the suddenness of some of these moves. There are, of course, China watchers who say a lot of these moves have already been signalled in speeches and in state media for some time. But nonetheless, the suddenness of it is catching investors off guard and is hurting sentiment. But to your point, this is all about bigger structural conversation going on about China's economy and how to make the workforce more productive and how to make it cheaper to grow families. And I think that that's what the agenda of the central government is, regardless of what the stock market does.
All right, Bloomberg's Enda Curran, our chief Asia economics correspondent in Hong Kong. Thank you so much. And another risk looming over the markets is the Delta variant. The rapid spread of the variant continues to force many employers to rethink their return to office plans. Bloomberg's Kriti Gupta joins us now and has all of the latest data. So Kriti, basically office activity is still quite low.
It absolutely is. Kailey, you are really seeing that blockbuster idea that you started to see, this blockbuster return to office in September at the end of Labor Day, now getting postponed to October, even to next year. And it's not just here in New York City. You see it in Wall Street, you see it in Silicon Valley, all across corporate America. And it turns out it's actually an international story. European investors, or European workers, I should say, waiting for some of those school holidays to end as well. In Asia, waiting to really ease those restrictions, very cautious of what that next wave might look like. But let's look at the data, because that's what we do here at Bloomberg. We have to look at the mobility data coming out of around the world, and of course coming out of Google in particular, starting to compare what the workplace activity is now all the way back to pre-pandemic. And what you're seeing isn't a very pretty picture. Still, even San Francisco, in New York, still half of what it was pre-pandemic. And even in Asia, down 3% in Hong Kong, and even in Europe, about down a third of what it was pre-pandemic. So lots of room to make up, Kailey.
Kriti, can we tease out a little bit one thing you mentioned, and that's Wall Street? What exactly do their plans look like at the moment as it relates to the return to the office?
Well, Danny, Wall Street firms, the big banks, were going to lead the charge when it came to New York City, that return to work, really setting the example for major cities across the U.S. and across the world. That has all kind of taken a pause when it comes to dealing with the Delta variant in particular, which is highly transmissible. So not only are they pushing their plans further out, but the folks that are going into the office are starting to really pause and take more stringent measures, requiring vaccines, wearing masks wherever you go. And that's in addition to some of these big banks and these big firms starting to look at a lot of pay raises. You just saw a visual on your screen about BlackRock, for example. We all heard about that 8% pay raise, looking at our watches, waiting for that raise to hit us. And now you're seeing Charles Schwab do the same. Not only did they push their return to office to 2022, but also boosted their pay for staffers by 5%, Danny.
Kriti, thanks so much. Bloomberg's Kriti Gupta there on some of the moves we're seeing from finance. Now to Washington, where House members will get an unclassified briefing on Afghanistan today. This comes before the House returns on Monday for a classified briefing and a vote on the Senate's budget resolution. Well, let's get straight to Emily Wilkins, Bloomberg government reporter, who joins us now from Washington. So, Emily, how's D.C. actually looking at Afghanistan right now? It seems the Taliban are clamping down and they're racing to get people out.
Right now, what we're seeing in D.C. is a lot of questions, a lot of people who are looking for answers. I mean, what we are seeing right now on the ground in Kabul is not the picture that the Biden administration painted several months ago when he started talking about how troops would be withdrawn from the region. Lawmakers on both parties have had a lot of criticisms for how this withdrawal has been handled, and they have a lot of questions that they want to get to the bottom to. This unclassified House briefing today, that's just the start of it. They're going to be having more briefings with the Intelligence Committee, with top officials both in Congress and with the intelligence committees in Congress. They're going to be looking more into this. You've already heard at least 4 committees come out, and both 2 in the House, 2 in the Senate, saying, hey, we need to look into this. We need answers. What did people know? When did they know it? And why was the withdrawal in such a state of chaos now, where U.S. citizens and Afghanistan allies who they want to get out of the country and bring to the U.S. aren't able to do so, can't get through that airport? So I think a lot of questions. This is something that we're going to see next week. But remember, lawmakers are technically in the middle of their August recess. Next week is kind of an asterisk to that. So we're going to be seeing a lot more when everyone comes back in September.
So let's look ahead to next week, specifically Monday, the 23rd. What exactly are we expecting to take place in the House, Emily?
So on the 23rd itself, we're just expecting House members to come back. It's really later in the week that we're going to see the drama begin. This vote over the budget resolution. And we've been talking a lot about the whole infrastructure versus reconciliation. The budget resolution is that sort of blueprint for reconciliation. It needs to go first so they can hash out the details of reconciliation. There's still a question on whether that's going to pass the House. They need all Democrat support, and you're currently seeing a standoff between moderates and progressives over when that infrastructure bill is going to pass. But after they take that vote, as well as a vote on a voting rights bill, they are expected to go back on recess, return back to their districts until about mid-September, when they're expected to come back to D.C. and start wrapping up more of the reconciliation process and finally pass that infrastructure bill.
All right, Bloomberg's Emily Wilkins in Washington, thank you so much. I do want to get back to the markets now and take a look at some stocks moving in pre-market trading here in the U.S., and a number of them related to COVID-19, one of them being vaccine maker Moderna. It's down about 3% in early hours. There was a report out overnight from the Washington Post that its vaccine may have a stronger link to a heart issue in younger recipients than previously thought. So that is weighing on sentiment. This is also a stock already down 22% from its peak earlier this month. Another stock moving to the downside on Delta variant related concerns is Norwegian Cruise Lines. Broadly, some pressure in the travel sector today. This is one of those stocks feeling that. It's down 2.3% before the bell. And then separately, we do have an earnings story. Applied Materials, which is a maker of semiconductor manufacturing equipment, reported last night actually a pretty strong quarter. They are really benefiting from chip makers trying to boost their output. Strong quarter, strong outlook, and yet the stock is down about 2%. Francine, maybe just weighed down more broadly by the risk-off tone we're seeing today.
Yeah, I just find it incredible. So you have the car makers actually saying they don't have enough chip makers or chips, but Applied Materials says it's actually producing so many more of them. Now, coming up, we'll talk about supply chains with Mark Haefele, UBS Global Wealth Management Chief Investment Officer. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger with Francine Lacqua in London. Kailey Leinz is in New York. As this market continues to reflect a more negative, a more pessimistic type attitude, we've been digging through the survey data. Everyone from businesses to investors to corporations has started to see their sentiment move more south. And I have another data point along those lines. Now, I have a chart here, so I also want to welcome our radio listeners as well. I know you can't see this chart, but I will explain it for you. Essentially, I have here the AAII, American Association of Individual Investors, their survey. They basically go to those in the association and say, okay, are you a bear? Are you a bull in this U.S. equity market? Now, again, for our radio listeners, for most of this year, and really until very recently, we've had the vast majority, around 30%, for example, back in April, saying that, yes, indeed, they are bullish on this market. But just in the past week, we've had that flip. Now we are net bearish when it comes to this sentiment survey. Again, that comes off the back of an equity market that has started to dip. We saw U.S. stocks barely eke out a gain yesterday, Europe having its worst day in a month, and of course, the Hang Seng entering a bear market. So what does this mean? Where do we go from here? To get a better idea, let's bring in our favorite charter holder, Eddie Vanderwalt, Bloomberg Markets Live editor. Eddie, sorry for the cheeky nod to your CFA. So, do it justice, but Along these lines of this sentiment change, are we seeing any signs of capitulation in this market?
Wow, I feel a lot of pressure right now, Danny. Listen, yeah, absolutely. I think we are just seeing a little bit of capitulation. We see that in the commodity space. We're seeing the stock market just not being as bullish as it was, and I think there's a number of reasons, right? I mean, number one, U.S. Retail investors are extremely important in setting the tone for sentiment globally. But I think also what we're seeing is, the Delta cases, and particularly in China, the softening in China, that matters for commodities and that matters for the dollar, right? And then on top of that, what we're seeing is, we're moving into Jackson Hole. And I think as we move into Jackson Hole, the central bankers are looking for a bit of collective responsibility. They don't want to be the single one who pulls the trigger. And I think, in this environment where they're all together, they've got a bit of cover and saying, okay, now is the time to kind of pull the trigger on perhaps a bit of tightening. So I think next week's going to be very, very interesting.
Eddie, what do you mean? You hold the CFA and we're not talking like 3 standard deviations. What is going on, Eddie van der Walt?
No quantitative analysis at all. I'm so disappointed.
Not yet. Well, not yet. That's like level 6 or 7. Eddie, when you look at the pattern that we've had so far, it seems that the U.S. is just hanging on to their gains because they're buying on the dip. Is there anything supporting that?
Buy the dip's absolutely been the mantra of our times, right? But it cannot go on forever. At some point, these markets pull back. Whether it's going to be now, whether it's going to be a couple of months in the future, don't know. But I think, that chart that Danny showed us, I think that just underlines to me that investors are accepting that at some point this party is going to end. And it feels like that is now. We will see in the next weeks whether it is. And, there's a lot to happen still. The PMIs at the beginning of next week, I think that will be really interesting, because if they show that the pivot towards services continues, I think that will help sentiment a little bit. But if they don't, if they show services softening, then the wage pressure and so on, all of those things will just push the Fed towards that quicker tightening. And it could just be difficult for the stock market.
Eddie, our colleague John Authers is out with a column on the Bloomberg today talking about TINA and how TINA, there is no alternative, just keeps getting reinforced because bond yields are still so low. Do we have to see bond yields moving higher in order for us to really see money coming out of this equity market?
I think so. I think we do see bond yields move first. I think bond yields are absolutely the thing that has been driving all of this. The fact that bond yields have been so low has meant the discount rate on equities has been, just phenomenally low, and therefore, you could justify these high valuations. But if the bond yields start going up, there's a flip side to TINA, right? There's a flip side, because once you see those bond yields going up, there's no place to hide. People will, and I think that's what worries me about the rally in the dollar over the last few days. The dollar is absolutely, so bullish, and that just looks like a fear barometer right now.
Yeah, I mean, the dollar, extremely, extremely interesting. I think we'll speak about it also with Mark Haefele, also the commodities sell-off. Our Bloomberg MLIV, Eddie van der Walt. Now, coming up, Vincent Reinhardt, Mellon Investments chief economist and former Fed official. That interview, 7 a.m. in New York, 12 p.m. in London. I know we'll ask him about the dollar as a risk barometer. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua and Danny Berger in London. Now let's get the first word news. And the biggest tax hike on wealthy Americans since 1993 is bogged down in Congress. The tax writing committees in the House and Senate are almost certain to miss their September 15th deadline for coming up with details. The problem is lawmakers don't know how big President Biden's spending package will be. Plus, they have different ideas about which tax measures to enact. In Texas, a setback for Governor Greg Abbott's efforts to suspend school mask mandates. The state Supreme Court has given local school officials temporary permission to require students to wear masks to class. Abbott has said wearing masks should be a matter of personal responsibility, not a government mandate. It will be the Biden administration's most high-profile trip yet to Asia. Vice President Kamala Harris will look to bolster economic and military cooperation in China's backyard. She'll visit Singapore and Vietnam starting this weekend. Leaders there will look for Harris to reassure them of America's role as a major trading partner, and Harris will be able to raise her international profile. And Tesla spent yesterday celebrating artificial intelligence. The company highlighted progress as well on its own semiconductor. It's designed to train neural networks that are the brains behind Tesla's driver assistance programs. Plus, CEO Elon Musk also discussed plans for a lifelike robot that he said would take the drudgery out of everyday life. I really don't know what to make about that robot, Danny, but I guess it's pretty cool, in theory.
My favorite thing is that to present it, someone apparently went on stage in a white suit and a black helmet, and Francine did some jerky robot dance. So I guess that's what the robots are going to look like.
We need the video. Is it cooking for my kids? Because that's the only thing. I mean, he talks about dangerous, repetitive, and boring tasks. So cooking for the family would be up there. So I don't know whether the Tesla bot just drives. Or
Dancing's not, though. We need to keep doing that. The robots can't take dancing from us.
No one will take dancing from us, ever. Danny and Kailey. Coming up, Mark Haefele, UBS Global Wealth Management Chief Investment Officer. We talk about the markets. We're seeing a sell-off still in Europe. We talk dollar, we talk commodities. Maybe we'll talk the Tesla bot. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London, Kailey Leinz in New York. Matt Miller is actually off today. Now, Danny, if you look at the markets, there is a sell-off. There's a sell-off that could be short-lived, or it could actually be continued in U.S. markets.
Right, and I know Matt Maley of Miller Tabak was talking to you, Kailey, and Matt yesterday, saying that it's just the start of something. It certainly feels that way. I mean, it's not an outright capitulation, but it does have the sense that people are giving up. Of course, Francine, it's also the summer months, so volumes are low, so the chances for heightened volatility is, of course, even higher.
Yeah, Kailey, how are you looking at the markets?
Well, they are definitely lower, to Danny's point. Volume about 14% below average on the stock 600 in Europe right now. And after being in positive territory earlier, it is once again lower, down by about 0.25%. And here in the U.S., of course, 4 hours to go until the opening bell. We did see a choppy session yesterday that actually ended in gains. But that day started with futures lower, and that is how today is starting as well. Futures are down about 0.4% on S&P E-minis. You are seeing that bid continuing to come into the bond market. Yields lower for a 6th day in a row. We're down 1 basis point on the U.S. 10-year yield to 123. And you are seeing just the smallest of rebounds in the commodity complex. The Bloomberg Commodity Index yesterday plunged to its lowest level in 2 months. Today, trying to stage a little bit of a comeback, but it's only up about 0.25%. Of course, as those Delta variant fears continue to loom over this market, you are seeing that show up in some travel-related stocks in pre-market trading. The likes of Norwegian and Carnival Cruise Lines down 2.3 and 1.3% respectively. Delta is in negative territory as well. Delta Airlines, that is. And then finally, Moderna, a vaccine maker, it's down already 22% from its peak, set to be lower by another 3% or so today, at least judging by pre-market trading. Some concern about a heart issue in young recipients of its vaccine that was reported on by the Washington Post overnight. Danny.
Well, Kailey, I'm looking at something that when stocks like yours showing are red, that this is reliably green. And I'm, of course, talking about VIX, the options gauge of volatility. I want to welcome our radio listeners as well, who I will explain to you the chart I have. But I want to point out that the VIX is higher yet again today. We're looking at a VIX at a 23%, the first time over 20 in a couple of weeks. But it's not just that. It's the volatility that's been forming under the surface for the past week. Now, again, for our radio listeners, I have a bar chart of weekly moves in the VIX. It is not percentage change. It is percentage point changes. So all of the math nerds out there, don't get upset. This is not a percent of a percent change. But basically, we've seen the VIX fall lower pretty consistently. And when it perks up, it's a pretty minuscule perk. However, so far this week, and we still have an entire trading day to go, we're looking at a gain of 6.2% percentage points in the VIX. That will be the biggest move higher in the volatility gauge since January. So we have the VIX moving higher. Yes, there's an options expiry, but also, as we were saying, it's the summertime. Volumes are low. Historically, this is the period where we see more volatility. So, Francine, just a lot of hedging heading into this market right now.
Yeah, I'm so glad you said it's not a percentage change, because otherwise we get like a barrage of like Tonkin emails. Now, joining us to talk about the markets is Mark Haefele, UBS Global Wealth Management Chief Investment Officer. Mark, when you look, good morning, first of all, when you look at equity markets, they're broadly in the red. Is this the start of a correction with conviction, or is this just markets trying to ask themselves what happens next?
Yeah, we would very much put the moves this week and option expiration week in that summer chop category after multiple highs. You know, you do get down days. We forget that.
Yeah, it is. I mean, volumes are very thin. Do you worry about liquidities? I mean, we want to talk about some of the things that you're looking at, but should we spend a little bit more time looking at liquidity into when the Fed could taper?
Well, I think the Fed is going to be in every conversation now for just about forever. So we should continue to talk about the Fed. I think that the minutes, which are from 3 weeks ago or so, landed at a bad time, right? Because when they were having their debate, everybody felt like things were getting better. The jobs are great, the consumers are spending, and the COVID-19 Delta flare-up maybe wasn't in the same place. So they sounded like Chuck Norris back then, but today, I don't think they're going to strike the same tone in Jackson Hole next week.
But Mark, in a world where the Fed is talking about tapering and a tapering may be imminent, you have these concerns coming out of China and you have the Delta variant. How defensive do you want to be?
Well, we don't think that this is a time to get defensive. I mean, we have diversified portfolio, and for investors who are looking for more defensive aspects of the market, we're looking at things like healthcare. But we still think that the reflation trade is going to work into the fall. That the COVID-19 situation in the United States, we're starting to see a slowdown in the case count raise, and we believe that will turn over just like it has in other places. And therefore, some of the things that are very uncertain this week will start to get a little more certain into the fall.
But on some of those elements of the reflation trade, I know you like energy here, and yet energy has halved its gains for the year. What makes you think that there will be upside in the next 3.5 months?
Well, first, some of this growth and pent-up demand has been slowed, particularly in the United States. But we're looking at things like consumer demand, consumer savings. Those things remain very strong. Secondly, in oil, as Asia starts to come back online, that demand will get more of a global picture. And so when we look at supply and demand into the back half of the year, we think that oil can go higher towards 75, and that should help energy.
Okay, so you have those better supply-demand dynamics coming into the picture, maybe a brighter economy. Why then, Mark, are we seeing this huge move in the dollar, taking out its year-to-date highs, trading at the highest since November 2020? What do you make of that?
Well, I think when you talk about the Fed, I think that's where you're seeing this in the dollar. And what's happened is that as the U.S. economy remains strong and the recovery, say, in Asia has been slowed a bit by COVID, and then you have the Fed talking about taper, the natural trade there for many people and for us is to say potential dollar strength into next year and then pull back a bit on emerging markets because typically emerging markets are impacted by the dollar.
Mark, let's stay in Asia. I know you and the team are not necessarily bearish on Chinese equities, but still you see more regulation to come. How do you put those two ideas together?
Well, I think for us, when we look at our global portfolios, we're neutral on emerging markets, in part because despite great valuations, China's a significant portion of the EM indices. When we look at Asia as a whole, we would be neutral on an allocation to China versus some of the other markets because we think that China's not going to grow any faster than the rest of Asia at this point. But there's also some values to be had. Not everything is under the regulatory gun here. If you look at energy or the green tech space, there's still opportunities in China.
Mark, first of all, I love your note, learning backflips and zero gravity, which kind of really, encapsulates the markets that we've been seeing maybe over the last year or so. But what do you do specifically with Chinese equity exposure right now?
Chinese equity exposure for investors in the region is, we have a neutral weighting to it. I think what we would do is not be adding on the internet side on these areas that are under regulatory scrutiny, not because we don't think there's values there, but we want to wait and get a catalyst, because regulatory uncertainty day after day after day makes it very hard to look at things like valuation. The other thing I'd say about China is, to invest in this market, you do have to be prepared for these very large sell-offs. We have them every couple of years, and this may be another one of those. So at this time, we're not saying go buy China, keep your allocation at neutral weight.
Mark, thank you so much for the insight. Mark Haefele there, UBS Global Wealth Management Chief Investment Officer. Now coming up, Angela Merkel in Moscow. It's the German Chancellor's final meeting with Vladimir Putin. We get the latest from Berlin next. We'll talk Afghanistan and Nord Stream 2. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua and Danny Berger in London. Well, German Chancellor Angela Merkel is heading to Moscow today, just over a month before voters decide on her replacement. She is set to meet with Vladimir Putin before heading to Ukraine over the weekend. Let's get more on this with Bloomberg's Maria Tadeo, who joins us from Berlin. So this will be Merkel's last visit to Russia as Chancellor. What is at the top of the agenda, Maria?
Well, this is the final meeting that Angela Merkel will be having with Vladimir Putin, and it is worth just looking at the fact that Angela Merkel has a very unique relationship when it comes to Russia. This is a German chancellor that grew up in Eastern Germany when it was part of the orbit of the Soviet Union. She speaks fluent Russian, and she's dealt with Vladimir Putin on a one-on-one basis for more than a decade. So her profile, it's very unique when it comes to that relationship. In terms of what's on the agenda, we know that we'll talk about the situation in Afghanistan. At this hour, the German government is still flying people out. They have been scrambling to do that and come under pressure in the past few days over the lack of preparedness going into this mission. The other big issue, of course, is energy. It's always a perennial topic between Germany and the Russian Federation. Nord Stream, that is going ahead, but the Germans have told and repeatedly said to the U.S. government that they will compensate Ukraine for potential transit fees that could be lost, and they could also prevent that from becoming a geopolitical tool when it comes to Vladimir Putin. But of course, the implementation remains very much to be seen.
Yeah. Maria, at the same time, Angela Merkel is really like a master diplomat, right? Not only because she speaks fluent Russian, but she bridges the kind of Asia-Europe divide whilst having pretty strong relationships with Russia. We have elections in September in Germany. Can anyone actually fill her big shoes?
Yeah, well, in terms of the domestic picture right now, Francine, the election and the polls that are coming out actually paint a race that's very tight, that's very open, and is very volatile. When it comes to Armin Laschet, that would be her natural successor from the Christian Democrats. This is a candidate that right now is in meltdown. He continues to lose support on a weekly basis. The CDU is also down in pretty much every poll. And if you look at the numbers that we just got today, by the way, that I'm seeing right now, the CDU does paint a very bleak picture. They're essentially neck and neck with the Social Democrats, and they have lost about 7 points in support in a weekly basis. So I really cannot just describe and really emphasize that this is a party that for 2 weeks is completely getting beaten down in every poll.
Maria, at the same time, the Greens have been calling to bring Afghan refugees into Germany. Is that having any impact on the polling when it comes to them?
Well, it's still very early to say what it's doing on the polls. I guess next week we'll have a better kind of window into whether or not that is playing as a factor. But it is true that they are competing on the progressive side alongside the Social Democrats, kind of saying, we want to help these people. We have an obligation. We have a moral duty to do this. So they're competing on that front. The problem for the Greens is that they're not able to get past the 20%. It does look like to some extent they have peaked, and they're now competing with the Social Democrats and Olaf Scholz. That's the current finance minister. He is flying in polls, and this week almost 40% of poll Germans said that they would consider him the most competent candidate. So he is at this stage the man to watch.
Thank you so much, Maria Tadeo, there in Berlin for us, of course, covering the fact that Angela Merkel is going to meet Vladimir Putin. Now, Venezuela is in default. The country has suffered one of the greatest economic and humanitarian crises in modern history. Now, after 4 years of crippling U.S. sanctions, President Nicolás Maduro is making a public plea aimed directly at President Joe Biden. It's time for a deal. Bloomberg's Eric Schatzker travels inside Venezuela and sits down with the power brokers that will decide the country's future.
Venezuela's decline is a story of destructive domestic politics and failed foreign intervention. It started with Hugo Chavez, the self-styled revolutionary, and it continues today with his chosen successor, President Nicolás Maduro. Venezuela used to be the biggest oil exporter to the United States, bigger than Saudi Arabia. But since 2019, U.S. sanctions have kept the country from selling most of its crude and forced it into default. Production that peaked at almost 3.5 million barrels a day shrank to just 310,000, not enough to meet domestic demand. Across the country, drivers line up for hours, sometimes days, to fill up with gas.
It's a disaster, a total disaster. Losing a day, a whole day of work, of rest, an entire day.
Even Maduro, whose authoritarian regime has withstood U.S. efforts to oust him, is desperate for a deal.
If Venezuela can't produce oil and sell it, can't produce and sell its gold, can't produce and sell its bauxite, can't produce iron, etc., etc., and can't earn a revenue in the international market, how is it supposed to pay the holders of Venezuelan bonds? This world has to change. This situation has to change.
For the first time in years, there's some reason for optimism. The U.S. remains deeply concerned about the ongoing crisis in Venezuela, and the Biden administration has set conditions for meaningful progress, starting with electoral conditions that abide by international standards for democracy. If the regional elections in November 2021 are considered free and fair enough, the Biden administration might relieve some of the pressure on the Venezuelan economy and its people. For Maduro, it's a tricky balancing act.
I would say to President Joe Biden, stop. From the White House, from the State Department, stop the demonization of Venezuela, the demonization of the Bolivarian Revolution, the demonization of President Nicolás Maduro. Hopefully we can find paths of closeness, of respect, paths of mutual benefit, and paths that allow us to normalize relations between the United States and Venezuela.
Bloomberg's Eric Schatzker there with Venezuelan President Nicolás Maduro. And you can catch the full Bloomberg special Inside Venezuela. That's tonight, 7 p.m. in New York, and that's midnight in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London. Now we're joined by Tom Keen-Kwank of Bloomberg Surveillance. Tom, when you look at some of the market moves out there, I think all of this anxiousness that we're seeing, the Delta variant, the regulation in China will probably come at the forefront as we await Jackson Hole. So Jackson Hole really taking a lot more importance all of a sudden.
Well, I think it's creeping up on us. Of course, the chairman saying he's going to be virtual with his speech to Jackson Hole. That speaks to the Delta variant. What I speak to is the similarity of Wednesday, Thursday, and Friday, Francine. Real correlations in the market. Futures at -15. The yield space, a dollar stronger, I think, is of note. The other thing of note is the wall of liquidity. I don't know what to make of this, folks. I'm agnostic, but there's a gloom crew that feels overnight repo expanding out over $1 trillion is a big deal. And there's another crew led by Ira Jersey of Bloomberg Intelligence who say, so what? Here's the so what. Francine, it's a moonshot today to $1.1 trillion of trust money overnight in the overnight repo market.
Yeah, you know what I actually picked up, and I thought of you as soon as I saw it. The Swiss franc is actually also closing in on the 106 handle against the euro, Tom, taking it to levels we haven't seen this year. And, you know, it's one of the key pairs to watch for risk sentiment.
Yeah, absolutely. I think you're dead on euro Swiss, folks. Francine just assumes because she's over there that it's Euro Swiss and not dollar Swiss, but Euro Swiss shows strong Swiss franc. The gnomes of Francine are out in force.
Well, speaking of dollar, if Fran's not going to mention it, I certainly will. There's a really interesting argument, Tom, from Ben Emmons of Medley Advisors saying that the dollar is the new 10-year yield, that if we're having this economic anxiety, it shows through in the dollar. I mean, what do we make of this strength? What are you watching when it comes to King Dollar that continues to move ever higher?
Well, I don't know if it's King Dollar. Yeah, it's stronger, but it really hasn't broken out. Maybe King Dollar waits for a bit of time. Ben Emmons writes very thoughtful notes. And to me, what's important there, that observation of the 10-year yield, is that dollar correlates everything out there, just not the 10-year yield. Sometimes that's not true. But right now, I would say, Francine, it's really, really true. The dollar strength we've seen grudging into the range, not out of the range to new strong dollars. I haven't even looked at euro today, 116.76. Francine, can you imagine a 115 euro?
I mean, at this point, we probably can. But, Tom, I would say, given, you know, dollar strength, go out there and buy more Gucci's because we're seeing a lot of these luxury stocks.
Well, they got
really
hammered.
rattled.
Yeah, they got hammered.
They got hammered. And this is just because China's trying to reduce this wealth disparity. Tom Keene, of course, co-anchor of Bloomberg Surveillance. He'll be on very shortly also with our Kailey Leinz. Now, this is what else we're watching. Danny, you're looking at options.
Always, forever looking at options, Francine. But today, especially because we do have a big options expiry. And I think this is important because we were talking earlier about how the VIX has started to tick higher. Now, there's a lot of reasons underlying this, but one of the reasons that the pros point to is because of this options expiry. Some weird things happen around it. Sometimes people need to hedge depending on whether they roll over their positions or not. So with all that being said, when we look at the market option today, we need to do that through the lens of knowing that there is an option expiry. And sometimes, Francine, that just means weird things happen on these Fridays.
Yeah, I love the fact that you're looking. I mean, I'm looking at options, but they're more like lunch options.
I like those too.
Yeah, this is what else I'm looking at. So it's basically a junior banker pay. We've been talking about it all week. We understand that Goldman Sachs could actually increase some of their salary increases to a wider range of junior bankers. So Goldman Sachs, according to FN, would, for example, increase the pay rises to trading, the asset management. We had a great chart looking at the base pay for junior bankers. Bank of America, JP Morgan, Barclays, Citigroup, Deutsche, Morgan Stanley, around the $100,000 mark a year. And then Goldman Sachs, Jefferies, and Evercore, I think, are actually much higher than that.
Yeah, and of course, Schwab just yesterday also boosting their staff pay by about 5%. So whether it's the big bulge bracket banks or whether it's the broker dealers and more retail, they're giving raises too, Francine.
Yep. Now, more Bloomberg Surveillance is coming up ahead. We'll hear from Vincent Reinhardt, Mellon Investments chief economist, former Morgan Stanley chief U.S. economist, and former Fed official, amongst others. I know a good conversation on dollar is shortly. This is Bloomberg.